Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik and this is going to be episode 4 of my portfolio analysis series. So today we're going to be taking a look at Amcor stock, ticker symbol AMCR. And if you have missed some of the previous videos in this series, I'll leave a link to some of those up here, so make sure to check out that playlist as well, where I go over some of my previous stocks. And if you aren't subscribed already, make sure to do that. It really helps out the channel, and like the video as well is a great way to show your support. So Amcor actually has some pretty interesting history. They have their origins in 1860s Australia, and they're originally in the paper manufacturing, but they basically expanded their business over the years, and now they produce materials for packaging of all types for all kinds of products, as we'll talk about a little bit later. But in 2019, they actually acquired Bemis company, and those two companies merged, and that is how Amcor became publicly listed under the ticker symbol AMCR. So as always, we're going to start out on the investor relations page and basically see what they're all about. So as they say, we are a global leader in developing and producing responsible packaging for food, beverage, pharmaceutical, medical, home, and personal care and other products. So they have 230 sites with over 47,000 employees located in 40 plus countries, and they have about 12.5 billion annual sales as of late, and they just list some of their segments in beverages, food products, healthcare, home care, personal care, pet care, and technical applications. And also they have they have this 2025 pledge for the planet, which is basically that they want to develop all their packaging to be recyclable or reusable by 2025. So obviously I think that's a good thing for the whole world and for them as a company. Investors will see that they're committed to, sustainability and stuff like that, so that could attract people. I know there's sort of a trend lately of some people like getting into ethical investing, which is definitely interesting, so that could attract some investors to the company as well. So Amcor is actually one of those weird companies that their fiscal year ends in the middle of the year, so their 2020 fiscal year ended in June, or at the end of June. So this is their 10K annual report, so it's pretty up to date. But there was another quarterly report for their Q1 of 2021, which is really Q3 of this year, that we're going to look at as well. But I just like to look at their balance sheet on the annual report just to get a feel of where they're at. So right now their current assets are $4.5 billion, and their current liabilities are about $4 billion. So it's always good to see that that current ratio is greater than 1. That's probably one of the first things I look at on a balance sheet, honestly. So most of their current assets are in inventories and stuff like that, so there's not as much cash, but that's all right. I mean, it is a current asset, so that's the point of it. And then looking at their total assets, around $16.5 billion, while their total liabilities are a little bit under $12 billion. So definitely good to see that their assets are bigger than the liabilities as well. So this is just their Q1 report from fiscal year 2021. So that's the 3 months ended in September 30th, 2020. So their GAAP earnings per share was 12.6 cents per share, which was up 207%. And their adjusted EPS was almost 16 cents per share, which was up 20%, accounting for any currency fluctuations, because they do have a lot of business worldwide. So that's one thing that does affect some of these numbers. And then their Bemis acquisition, like I was talking about before, they had some cost synergies of about 20 million just in Q1, and they're expecting 100 million, or so far they've had 100 million of that delivered, and they're expecting about 80 million more, I think. They'll touch on that later. Their dividend increase was to 11.75 cents per share. It was only 11.5 cents per share before, so that's really not anything spectacular. I really want to see them start raising that dividend a little bit more to get me a little bit more excited as an investor. And they also announced some share buybacks as well and raised their outlook for EPS in 2021. So like I was saying before, they acquired Bemis in 2019 for an all-stock transaction, and so far in Q1 2021, they delivered 20 million pre-tax synergies. So basically that means that any like overhead costs or operating costs that are between the two companies, that they can kind of merge and then cut those down so that those costs are less because they're one company now. Those are called cost synergies. So basically they're predicting a total of about 100 million or 180 million, sorry, by the end of 2022. of total cost synergies, so that's really good. And then they're talking about shareholder returns, so they did increase the dividend from 11.5 cents, which is definitely not fantastic. I would like to see more, but hopefully we'll see what they can do in the future. And then they did announce that share buyback as well. And honestly, I'm really not a fan that much of share buybacks because it can help increase the stock price. But to me, it's definitely better than share dilution, that's for sure. But that really only helps you if you sell your shares. So as a more of a dividend focused investor, I'd rather they increase the dividend a little bit more instead of focusing on the share buyback. But I mean, it's definitely not an awful thing for them to do. So this is just a quick look at their income statement. So they basically had about $3 billion in revenue this quarter from their flexibles and rigid packaging segments, but last year, this quarter, they had about $3.1 billion in revenue, and that's definitely not good to see. But they did put this note here that basically says that overall those sales were 2% higher than last year when you account for currency fluctuations and raw material costs and stuff like that. So basically they're saying their sales increased, but on the books it looks like they decreased. So it's pretty close to even, but it could really be argued either way, I guess. So going back to the Bemis acquisition, I also wanted to include this point about the cost synergies. Although they're getting almost $200 million of savings because of those reduction in certain costs related to the acquisition, they also have to spend money in order to facilitate the integration of the two companies. So right here they're talking about this integration plan, and basically they're saying that the integration plan is expected to cost about $200 million. So even though they are saving about $180 million with these synergies, they're spending about $200 million as well to integrate the two companies. So it's kind of a break even there. And also they did have to take on $1.4 billion of debt for that transaction. But overall, their debt really isn't too bad. It's around $5 billion, maybe a little bit closer to $6 billion. So that's not too bad at all. So on Seeking Alpha here, we can see the yield is right around 4%, and that payout ratio is looking pretty good, around 67%. Obviously, they're a newly public company, so they don't have really any history of dividend growth over the years, but I would really like to see that happen in the future, and I really think it's possible for them to consistently pay a dividend and consistently grow that dividend because of the nature of their business. You know, there's always going to be a need for packaging, and especially sustainable packaging as we move into the future. So honestly, I think the future for this company is pretty bright. I think their acquisition of Bemis is a great one, and if you look at some of the acquisitions they've been doing over the years, I was looking at a list, and it's got to be at least 20 in just the past 10 years, and they've been expanding into South America and Asia, specifically China, and even like New Zealand and stuff like that, South Africa. So they're really trying to go worldwide and really expand their reach. So as I mentioned, this is the fourth largest position in my portfolio. I will pop a screenshot up right here of what that looks like. I recently actually bought a little bit more. I originally just had one share for a while, but I decided to buy a little bit more. They kind of took a hit. I don't exactly remember why, but they dropped down some, so I added some more. And I think I might add some more if there is some sort of correction or a big stock market crash or something like that, you know. But right now, I'm just staying put with my shares. I think it's a great company, and as I do more and more research over time, I honestly, my conviction in the company rises even more. So although I love it, I think you should definitely do your own research, as I'm definitely not a financial advisor by any means. So do your own research, and then when you make it big, you can attribute that success to yourself. And the quote of the video is, "Your losses are limited to the amount you invest, while your gains have no absolute limit." And that one was said by the investing legend himself, Peter Lynch. I'm actually reading his book, One Up on Wall Street, right now, and that quote really stuck out to me. And for me, I'm mostly a dividend-focused investor, but that sort of made me think about the possibilities with growth, and that I think I need to focus more on growth in the future, or at least expose myself a little bit more to growth in the future. So I think sometime in the next few months, I might be starting some sort of small growth portfolio with M1 Finance, just to test my feet in the water and get a feel for it and see what I can do with that. Thank you guys so much for watching. I appreciate all the support, and I'll see you in the next one.